Yes, this new US-China truce could reshape the global economy far beyond what headlines are saying. For over 5 years, both countries engaged in an intense trade war. Tariffs, restrictions, sanctions, and retaliations that cost hundreds of billions in trade value. Now, for the first time in a long while, both sides have stepped back. Markets are responding, supply chains are shifting, and global investors are watching every move. But is this a long-term agreement or just a temporary pause? Is it a real shift in diplomatic strategy or just economic necessity? In today's video, we'll break it all down. How the markets are reacting, what's happening with global supply chains, what's really behind the truce, and how it might impact the global economy, including your country, starting now. Let's get started. The global financial markets responded immediately to the announcement of the US-China trade truce. Within 24 hours, major stock indices rose. The S&P 500, NASDAQ, and Hang Seng all posted gains, with tech and industrial stocks leading the way. Why such a strong reaction? Because markets hate uncertainty, and the trade war introduced years of instability. Businesses struggled to predict import costs. Investors feared tariff hikes. Global investment slowed. A truce, even a temporary one, signals predictability. Let's break this down further. Tech companies, especially those heavily tied to Chinese manufacturing like Apple, Nvidia, Qualcomm, and AMD, saw increased investor confidence. Tariff relief reduces operational costs and restores margin predictability. Semiconductor stocks especially surged as China is a key market and production hub for chip makers. The Chinese yuan appreciated as confidence returned to Asia's biggest economy. The US dollar remained stable, while emerging markets like India, Vietnam, and South Korea also saw capital inflows, reflecting optimism that regional trade could stabilize. Bond markets also responded. Yields ticked up slightly as investor appetite for risk grew, with the assumption that global growth could rebound if trade frictions ease. However, caution remains. Investors remember previous truces that failed. This surge is based on expectation, not confirmation. If talks stall or tariffs return, markets can whiplash. So while the short-term market bounce is real, the long-term effects will depend entirely on whether the truce holds and what comes. Next, the supply chain disruptions caused by the US-China trade war were deep and far-reaching. From semiconductors to sneakers, companies were forced to relocate factories, renegotiate deals, and absorb rising costs. Global production became more complex, less efficient, and often more expensive. Now, with the truce in effect, companies finally see a moment of clarity. Tariffs are being partially lifted or paused. Import-export procedures are being eased. Communication between Washington and Beijing has improved. For manufacturers, this creates a valuable window to relevance operations. Some are considering a partial return to Chinese production, others are reinforcing their China Plus One strategy, diversifying operations but maintaining core infrastructure in China. Sectors most affected include electronics, smartphones, laptops, semiconductors, automotive, batteries, wiring, electronic chips, retail and apparel, clothing, footwear, household goods, consumer tech, smart devices, TVs, appliances. Shipping routes are also stabilizing, with fewer surprises at ports and reduced inspection delays. Logistics firms can better plan inventory flows, but caution remains here too. Companies know how quickly policies can change. So many are doubling down on flexible production, investing in automation, regional warehouses, and diversified sourcing models. The key word now is resilience. This truce isn't a return to 2016 trade models, it's a strategic pause that allows companies to prepare smarter for whatever comes next. Let's not pretend this truce is about peace, it's about pressure. Both Washington and Beijing are feeling the weight of economic slowdowns, rising inflation, and domestic challenges. This deal wasn't born from goodwill, it's a strategic necessity for both nations. In the US, rising interest rates, inflation anxiety, and a looming presidential election mean economic stability is a top priority. A prolonged trade war could spike consumer prices and damage political prospects. In China, post-COVID recovery has been uneven. Youth unemployment is high, real estate markets are unstable, international confidence in Chinese investment has dipped. Easing trade tensions with the U.S. is a way to rebuild global trust and reduce internal volatility. And both sides know this isn't just about goods anymore. It's about the next generation of global power AI, semiconductors, 5G infrastructure, renewable energy, and rare earth minerals. The trade war was phase one. Now, both countries are racing for technological dominance, and this truce allows them to shift focus from tariffs to innovation and influence. So while on the surface it looks like a friendly gesture behind closed doors, it's a recalibration. Each side is preparing for the next strategic move. The US and China don't just affect each other, they shape the entire global economy. With trade tensions easing, countries that depend on exports from Germany to South Korea to Mexico can ramp up production again. Emerging economies tied to supply chains like Vietnam, Thailand, and Indonesia are breathing easier. Global shipping costs, which surged during the trade war, may begin to normalize. That means lower transportation costs, faster delivery times, and improved price stability across industries. Commodity markets also react. Copper, lithium, and oil, key resources affected by manufacturing output, see increased demand projections. Even agricultural exports like soybeans, which were hit hard by tariffs, may regain momentum. But the truce's real value lies in confidence. When the world is the largest, economies find common ground, investors become less fearful, trade picks up, and geopolitical tensions ease at least temporarily. Still, this is not the end of risk. Any sign of breakdown, new sanctions, political standoffs, or economic retaliation could undo progress instantly. So global players are cautious, but hopeful, and that's a powerful economic shift. So how does the US-China truce affect the global economy? It reduces uncertainty. It restores confidence. It gives businesses and governments room to breathe and plan again. Markets rise, supply chains untangle, and global growth could gain traction if the peace holds. But make no mistake, this is not the end of the trade war. It's just a pause before the next stage. The global economy now stands at a fragile crossroads. If the world's two biggest powers choose cooperation, we could enter a new era of growth. If they don't, the fallout will be global. If this video expanded your thinking, subscribe to Feed the Mind for more breakdowns on global events, science, and the future of technology and power. And don't stop here, watch our next video to keep your mind sharp and your curiosity fed.